And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Prep Friday, January the 6th. My name is John Hoagland. Thanks for trusting me with your time. Well, we made it to the end of the first week of trading. We've got some interesting opportunities in front of us today. We're going to take a look at those very shortly. But remember, our goal here is to find accurate context in these markets. Always think about risk management and remain patient in our trading. If you're already in the markets, hopefully you've been the right direction, you've been the right way. The unemployment numbers came out this morning with the unemployment rate dropping to 3.5%. They adjusted last month down 0.1% to 3.6. They were expecting 3.7 this time. Came out 3.5. Everything jumping around as we speak. The non-farm payrolls was 263 added last month. They were looking for 200,000. This last month, and then it actually came out 223,000. Private non-farm payrolls, 221 in November, 180,000 is what they were looking for in December, 220,000. A little uptick in the participation rate as well. They raised the participation rate 0.1% from November. This December participation rate, 62.3. So we do have a couple more economic information, economic numbers coming out today, factory orders and ISM services index. None of them expected to be as impactful as the unemployment number and the non-farm payrolls today. These numbers have me a little bit perplexed as to the market reaction to them, and I have me wondering what this is going to do with the Fed's plans to continue to combat inflation. Stocks were mostly just kind of steady prior to when these numbers came out. Actually, they were leaking to the downside. The U.S. dollar was near 1-month highs after yesterday's strong labor market indicators. So we've got some more strong labor market indications today. Investors smell higher rates for longer as the Fed fights inflation. Again, these numbers, the Fed is looking for some lower employment numbers, some higher unemployment numbers to help them combat inflation, and it's just not happening for them. Southwest Airlines is saying that the cancellation fiasco over the holiday week is going to cost them up to $825 million. Millions of dollars. Crude prices have been flattish since Wednesday in the EIA announced a 1.6 million barrel boost in inventories. Not much of a reaction going on here, so we're going to see all these things on the charts very shortly. A brief look at the VIX to dollar index and the yield on the 10-year a couple of minutes ago. VIX is up slightly, 22.77. Dollar index off its overnight high, but still higher on the day at 105.26. Yield on the 10-year also off its high for the day, but still up slightly at 3.72%. Make sure you hit that lucky like button, share, comment, question, feedback, and heckling and love are always welcome. Make sure you subscribe to our YouTube channel so you get notifications when we do go live. Speaking of that, this will be the last event for this week, Monday, the beginning of the first full trading week of the year. We'll go back to the usual Usual schedule for all the events. If you were with me for group coaching, Make Hogue Money, thanks to Travis for taking over Make Hogue Money yesterday. We had a little bit of a internet issue here, and I had made him a panelist, which allowed him to take the reins, and I'm glad that he was able to do that. I'm sorry that I missed it and that I don't have a recording of it. So we look forward to getting back into the saddle here on Monday. So, good morning, everyone, my fine feathered futures friends and family. Charles March is the first one in the room winning the prize this morning. Caprice Shaw, Scott Sawney Conquered, J.M., Timothy Marks, Morpheus, good morning, Jay Bremen, good morning, Les, Caesar, Phil, good morning, Ron Murdo, you stay classy, Sophie, good morning, sorry you got slipped in the oil market this morning. It's a long day, though. Let's see if you can't get back to center and get your trading back in order. Cherry is awake. Hopefully I am too. George. Lacey, George says, good morning. Vince, my guy, how you doing? Bill Phillips, Joel MB, Terry King, Alejandro, Dr. VJ. Yeah, that was quite the spike, wasn't it? Good morning, my brother Randolph. To my Mortimer, Rick, good to see you. Love you as always. Serenity Trader. Laura McLaren, Dimitar Dark Heaven White House Cap. IPS Warrior Fan 186, another False Hope Friday play. Got lots of these over the past 6 months or so. Yeah, the initial reaction to some of these markets when these numbers come out can be a little bit deceiving, right? Dowitzer, good morning. Denise, good morning. Jason, chart language. Who else woke up in the back? Who woke up in a bad mood? I'm usually not in a bad mood. If you are, chart language, just make sure that you don't let that mood leak into your trading today. You're up again. Here I am up again. Good morning, Fred. You're in a happy mood. Glad to hear that. Dollar got hammered. Fred, let's all get hammered. Oh, my goodness. Serenity. I'm seeing the dollar up slightly. Broke 105 after 105 to 105.03 after the numbers. Yeah, it's in a little volatility there, right? Sarah Hall, prayers and love to you. He did well. White House Cap, good morning. I'm doing terrible in my funded account. Sorry to hear that, ZK. Sometimes it takes a while to get your head wrapped around where you are. It just adds a little bit more duress. It makes things a little bit more difficult to make those hard decisions. Keep at it, ZK. Sophie, Rooster, cock-a-doodle-doo to you. Haggle Matters, good morning. Spencer, big swings this morning. Yeah, Fred, talking to ZK, we are all rooting for you. We're looking forward to your success. But it never seems to be a straight line, does it? Good morning. Cool in Florida today, 62. It's 29 here in Chicago. Much love. Thanks. You made me laugh a little bit. I'm a moody, big guy. There you go. Yeah, Alex. All right, let's jump into the charts. The 10-year is a bit of still remaining a bit of an anomaly or a bit of a Phil. Hey, Phil Kuhn, it's good to see you. Alex. 10 years still is a bit of a quandary to me. I don't really trade it that much, so we're really going to be focusing on the more popular products, the S&P, the crude, gold, NASDAQ, and we'll take a look here first at the daily in the S&Ps. All right. Well, chart language, it doesn't surprise me when these knee jerks happen after these important numbers, because if you watch the dome, when the number came out, there was probably about a 5 to 7 point differential between the bid and the offer, and the dome goes down to 1 or 2 contracts per price on offers and bids. So the market gets very illiquid and tends to create bigger price swings. As cooler heads prevail, the blood comes back into the market and you start to see more bids and offers, and it becomes more liquid. So what I'm looking for, chart language, is for the longer time frame, day time frame traders, the larger traders that trade these markets. When they come in, what is their response to this? They're usually going to be waiting until we get closer to the open to start to execute, because they want that liquidity to help hide their activities. All right. Okay. So the E-mini S&Ps, let me get organized here. Well, a lot of anticipation for the NFP, non-farm payroll. We are still in the area of balance that we have been in. Volume and open interest has been good, but it was a little bit slower yesterday, probably again in anticipation of today's releases. I'm looking at what I'm seeing is almost a head and shoulders here on the daily chart. Now, I'm not necessarily all that pleased with the way the market came up to this, but it's starting to make me think that if we can't hold weekly kickoff low, if I'm looking at this line here as the neckline of a potential head and shoulders here, failure to hold that weekly kickoff low here could bring a new leg to the downside that by measured move, I see down to 34.30. I'm really hoping that that's not going to happen, and that you can all say, yeah, nice job, Hogue. You didn't, you were wrong in that. There's nothing that I'm trying to predict here. There's no forecasting. It's just what we're seeing in the context of the marketplace on the daily chart. We had a head and shoulders here that I think we got relatively close to completing the measured move. If we have a secondary head and shoulders here, then that measured move goes from the top of the head to the neckline. I'm actually going to close this up a little bit here to the neckline, which we're going to be looking at as the weekly kickoff low. And if we break out down below that, that's where this move to the downside comes in. And again, I'm hoping that this is dead wrong, not predicting anything. But it's, as we all know, anything is possible. But again, we've got to be able to accept below this neckline, below this weekly kickoff low. This weekly kickoff low is a target-rich environment. We've got last week's low. We've got all kinds of things going on at that level, and I'm hoping that the vision that traders are seeing in the market is, of course, going to be higher, but we don't get to choose that. We can't predict. We can't forecast. We can only look at the context we have and use that context to find good opportunities with small risk and bigger rewards. Here's the 30-minute chart. Well, a fine rejection of lower pricing here. Doesn't change the fact that we're still in balance. We're still in range. So that's going to tell me that I'm probably going to be looking to be patient this morning, look for opportunities as the day goes on, because until we break out of this area of balance, we're more in shorter time frame control than we are in longer time frame control. So I'm, excited about some bigger possible opportunities today, and at the same time reminding myself to remain patient, to wait for the market to tell me something. I can go looking for trades all day and I can find 1 million of them. Most of them aren't going to be any good. I'm going to wait for the market to whisper to me and say, here's your chance. The 30-minute, we had some overnight inventory, perhaps to the short side. It's definitely to the long side now. We got a pretty decent spike in volume here before the regular trading hour volume comes in. So, but again, where is it? We are right in the middle of all of this. We are right in the middle of balance, patience. It's definitely sore toe day. We've already stubbed the toe to the upside here. As traders digest this, is what I'm more interested in being able and available to trade. This is the profile from yesterday. This is the kind of low area, the last week's low that we're looking at is the lower extreme of this area of balance. We did end up with a small degree of excess at the low and a low excess high, an unfinished upside auction here yesterday. Well, with this information, we're going to be opening above that week high, indicating that the upside auction very well may not be over. We did leave one end of the initial balance at the extreme. The upper end of the initial balance was the high of the session. We did extend just a little bit below. This is almost a normal day, a day that would be kind of waiting for new information that we now have today. Let's look at crude real quick. Okay, it seems as though this market is attempting to just digest new pricing below the weekly kickoff low. We added 3,700 in open interest yesterday. Volume was a little bit lower. We asked yesterday in the forecast, are we starting to get a little bit too short? Do we need a pullback to even out inventory before we can continue to push down to what I'm hoping for is an opportunity down to $70? The low, the floor that was put in by the White House about a month ago when they said they were going to start buying crude at 70 to replenish the Strategic Petroleum Reserve. So, again, just kind of feeling like we're getting a little bit too short here. Could this be the beginning of a bear flag? Take a look at the 30-minute chart. No overnight inventory until, of course, the numbers came out. We've just opened, put in a new overnight high, but this high and this low, the high and low for the last 2 days of regular trading hours, I'm viewing as an area of balance. Obviously, that's kind of what it's become because we've been inside Wednesday's range largely since the regular trading hour range was established. We couldn't get down below it yesterday. We couldn't get to the high of it yesterday. Today, our low is low of value. Our high is the high of Wednesday's range. So in this area, I'm using range-bound rules. Fading extremes against the high, fading extremes against the low. By fading, I mean selling at the high and buying at the low until it proves to be wrong. So if we're looking at opportunities up here, I'm kind of looking to the short side, and unless we take out the overnight high or the high of Wednesday's range. Similar, I would be similar to the downside because, again, I can limit the risk. If I can get a trade up here relatively close to the high or this high, if it gets much through it, it's probably telling me that the trade is wrong and to readjust, reassess the situation. Here's the TPO chart. So excess on both sides. 73.67 was settlement. So that's right here in the middle. Normal variation day. The lower extreme of the range yesterday is the low of the IB. Just so we know, 6 out of 7 of our products today had one extreme of the IB as the high or the low of the session. Something we talked about trying to keep a little bit of track of. It happens with a very high degree of consistency. So anyways, here's our overnight profile. The move to the upside after the numbers came out. This is the area where we're looking for possible fades. If the fade comes and it moves back down to the center, that's a great trade. We get down to the low, we take that trade and it comes back to center, that's a great trade. Upon acceptance outside of this 2-day, 3-day balance that we seem to be forming, then we would go with those breakouts. It's never that easy, though. It's never, hey, we're breaking out, let's just buy it. You've got to be crafty in your execution. NASDAQ next. So the NASDAQ doesn't really have that same head and shoulders. I mean, it did, and we've finished it. But it doesn't have that longer term head and shoulder look. Again, we're still in balance here. We're still hanging around. Similar but different. We don't have the same kind of technical formation here on the daily chart that we do in the S&Ps. Well, the NASDAQ's been weaker all along. It's the weakest. I mean, we're 35% off the all-time high here in the NASDAQ, where we're closer to 25% off the all-time high in the S&Ps. This is a much deeper dive, as you will. We added on the downside yesterday 5,400 additional contracts in open interest, and volume did fall just a little bit. We got the weekly kickoff in play here. We got a pretty good jerk down to that level at some point last night, and it is presenting as support. Again, range-bound rules apply. Take a look at the 30-minute chart. So the market took us right down to weekly kickoff low. No acceptance. If we took this fade, well, it was right when the number came out, of course. But if we took this fade and we got long down here against this level, we had a really nice trade already. What's the bigger picture? Well, we are in range. Stay patient. My focus for my bigger opportunities are going to be on the extremes. Last week's high, last week's low, the support that we just ran into this morning. Here's the TPO chart. Excess on both sides, normal variation day, and yes, the upper part of the range is the high of the initial balance. That initial balance is the first hour of trade. So we put in one extreme of the initial balance in that first hour, and it happened to be the upper in the S&Ps and the NASDAQ. So we got our knee jerk. We're already coming back into range before the open here. Gold. So we had a nice pullback right back to the weekly kickoff high here, 1831 yesterday. We've found support there. We're getting continuation, perhaps an opportunity for continuation of this upside market state as we speak. We lost 2,800 in open interest yesterday, indicating potential long liquidation on the profile. You're going to see it's a B shape, so that supports the idea that we had some long liquidation, some profit taking yesterday, which does take selling power away from the marketplace. Take a look at the 30. So here's our move down to weekly kickoff low, finding support, settling at 1840.60. The knee jerk after the number came out was to the upside. No gap because this market opens at 720 or 730, and depending on what platform you're looking at. Going to be a bit of a challenge today, I think, to be patient to find really good trade location. Take a look at the profile. So here's the B-shaped profile from yesterday, long liquidation. When we see a B-shaped profile and we lose open interest, that's long liquidation. That took selling power away from the market. The fact that we opened, point of control has already been checked from yesterday, looking to possibly repair the space here between this point of control and this point of control. I see Chart Language is asking about point of control, and thank you, Fred, for offering an excellent answer for that. Point of control is popular trading, the most popular, the fairest trading price of the day. There's two of them. There's the TPO point of control, which is the widest line of TPOs closest to the center of the range. And then there's the volume point of control, which is the single price that has the highest volume. These are comfortable levels. These are levels that I usually do not like to trade. Thank you, Fred, for answering. So I'm kind of looking at gold as a potential for repair between this little gap we put in the day before yesterday, the point of control up here and the point of control down here. We've already somewhat tested this point of control, looking for the market to rotate back to this point of control to repair this space right here. The euro is taking it a little tougher here with the dollar. We've got nervous longs bailed a little bit yesterday. We lost about 2,600 in open interest. It's a B-shaped profile, which you'll see shortly, indicating long liquidation. Now we find a little bit of resistance at weekly kickoff high coming at it from the other end. Support initially sometimes becomes resistance. So we're looking at breakout rules now. We've closed below. We're showing acceptance. We're breaking the market state. The upside and the digestion have now broken to the downside. Technically, we should be looking for opportunities to sell strength. Here's the 30-minute chart. Overnight inventory basically was just reconciled after the 7:30 number. The market could not get back to the weekly kickoff low. Support, resistance. We're looking for this market to continue this push to the downside. Technically speaking, it's all about context and finding good risk management levels. Well, the weekly kickoff level might be one of those levels where we're going to be able to limit risk. Here's the TPO chart. B shape yesterday, long liquidation, takes selling power out of the marketplace, but we're against a longer time frame important inflection level of 10600, and we've stopped short of it so far this morning. If we reaccept above that level, all short bets are off, but acceptance is, of course, subjective and difficult to recognize correctly. Here's the 10-year. The sense of higher rates squashes price above balance. Markets not necessarily acting like they're in fear of higher rates for longer, but as this information is digested, that may change. Yesterday's open interest off this level was plus 5,000, which in the 10-year is relatively inert. Volume was off just a little bit. We're forming balance here. Here's the 30. Okay, we hit yesterday's point of control. Let's take that back. 1, 2, 3. Low, high, repair. From Wednesday's high to Thursday's low, I'm going to use that as my areas of balance and look to fade extremes until something else happens. And still just kind of fascinated with this natural gas market. The continuation yesterday added 14,000 in open interest. That's over all of the contract months. Still pretty decent. Volume, decent. Breakout, close below the weekly kickoff low. I don't really feel like I want to buy this market, but I got to remember, I got to watch for profit taking. It's Friday. It's come a little bit of a ways over the last couple of weeks, and even this week, it may see some profit taking, some short covering at some point. And markets that are directional like this have very vicious and fast opposite moves. Take a look at the 30. So any overnight inventory is now reconciled. We're back in range, back in value. We opened back in range and value. I'm going to try and stay patient in this. I'm well aware that I could miss something. I don't really trade this market much, but just kind of looking at if I would be kind of calming down a little bit as the market has kind of returned back to value from yesterday. And for the profile, high of the initial balance. Somewhat of a trend day to the downside. Excess at the high. Gap closed to the tick, looks like. Back here in range, the lower end of the range. Still looking for opportunities to sell strength. Still proven wrong. All right. So that's what we've got for you this morning. Again, it's the market prep. And I'm looking forward to a good yet challenging trading day. Don't forget, there is no perfection in trading. We're never going to be right all the time. Be accepting and go easy on yourself. Make sure you manage your risk well. Risk not thy whole wad, so that you can come back and play again on Monday. Point is, when you can get to a point where you can maintain an account for a very long time, you're putting yourself in the driver's seat to get better and better at understanding yourself, which is really the most important thing in trading. We can be excellent technicians. If you don't understand how your mind and body are going to help or hurt you, you're missing a big part of the picture. So let's take our deep breath. Stay humble, grateful, and creative in your trading today. Hopefully you have a good trading day. I won't see you again till Monday morning for the market forecast. And have a great weekend. Be kind to yourself. Be kind to others. Don't forget to pray for peace in yourself and in the world. Go pet a dog. Do something nice for somebody else. And blessings to you all. We'll see you on Monday morning. Have a great trading day and a wonderful weekend.